Woke up late, hit the bell, markets open straight to hell. Leverage high, nerves are fried, but I'm in too deep to bail. Charts are bleeding, red tsunami, bought the dip, hello tsunami. One more contract, double down, now I'm hanging by a thread. I was chasing tickers like they owe me rent. Now the broker's knocking saying pay your debt. I was diamond handing, but my hands got wrecked, and my P&L looks like a fucking mess. I was one bad trade from a margin call meltdown. Lost it all fast, now I'm spiraling down, down. One dumb bet, now I'm out of the game. But I'll be back next week, still ain't learned a thing. Took a loan, maxed the bet, thought I'd ride that rocket jet. Now my balance looking like a post-crash cigarette. Saw the news, bought the hype, should've known it's all a grift. Now I'm back holding this stock like it's my only Christmas gift. Tried to hedge, got wrecked, tried to pivot, lost the bet. Took a swing, caught a knife, now I'm drowning in regret. Told myself I'd play it smart, just one more and then I'm through. Now I'm outside in the rain screaming, please just break even, dude. I was chasing tickers like they owe me rent. Now the broker's knocking saying pay your debt. I was diamond handing, but my hands got wrecked, and my P&L looks like a fucking mess. I was one bad trade from a margin call meltdown. Lost it all fast, now I'm spiraling down, down. One dumb bet, now I'm out of the game. But I'll be back next week, still ain't learned a thing. I ain't learned a damn thing. I ain't learned a damn thing. I ain't learned a damn thing.
Oh, brother. Oh, brother. Oh, brother. All right, we're back. I just wanted to make sure my audio is working. We had a little bit of technical difficulties, but hey, it's a beautiful Tuesday, potentially a turnaround Tuesday in the overall market after absolutely getting clobbered yesterday. SPY dropping 2.66%, Q's dropping 3.88. The VIX was up at one point above 30. I mean, it was wild. Right now in pre-market trading, we're pretty much unchanged. If you look at the futures market, slightly red, it was slightly green. It was more red last night, but we're getting a little bit of a recovery right now. So I'm going to be going into my base plan for the day. And I do believe that there's actually a real shot at a turnaround Tuesday, but it's not one of those things that I'm necessarily playing out of the gate because there's a couple things I need to see at market open to have the confirmation to try to play turnaround Tuesday. So I want to be very, very, very clear here. My base case right now is potentially a negative gamma Vanna fueled type of push, potentially up to 5,700. But in the pre-market prep here with all of you, I'll be going over specifically what I'm looking for to actually put that play on. Right now, coming into the market, I am flat. All the money I made yesterday, I left you guys. We were already up a good chunk. And then with the assistance of the Discord yesterday, I think I ended the day on my swing account maybe up $84,000 on options, and then locking in another $50,000 on futures, which you guys all saw in real time. Very happy to report that I kept myself disciplined. I didn't keep trading off of stream on that futures account. I did my 2 trades, got in, got out. You saw during the trades yesterday on the futures market that there was a little bit of confusion, and it was silly, like it was kind of silly on my part because I forgot about the anchoring to your unrealized numbers rather than your realized. So when you're first growing your account, it's a little bit better to not necessarily be swinging for the fences and then withstanding drawbacks. What you really want to do at first to grow your account is kind of just hit those singles over and over again, so your realized and your unrealized are growing together until you get kind of a larger buffer. So that was a weird realization that I had during the trade yesterday because there were some pullbacks and I was like, oh dude, I've been here before, but it was a while before I had been there. So With that, I think I have a better game plan going into today in terms of how I want to manage those trades. And then also with respect to the overall market, whether you're trading futures or options, I will be giving you that full breakdown of what I would need to be seeing to get excited about playing a potential push. But I do want to be clear today, whether we do or don't get a push, if there is any form of a push today, tomorrow, the next day, I still believe it's going to be of the dead cat world. As in, I think we could get a push, but I really do not see a strong recovery in this market until we get rid of the equities OPEX, the volatility OPEX, the JP Morgan collar at the end of the month, done with the quarter. There's too many things really packed between March 18th and the end of the month that I think we need to just clean the slate with all of that. So I want to be clear. If you see a green day today, and people are talking about making money and all that stuff, I'm of the mindset that that's more of a short-term thing because I believe still strongly that any of these short-term pops are to be shorted until basically the end of the month. So if we are, and the reason I'm really bringing this up is because over the past 2 weeks, whenever there's a green day, everyone's screaming, buy the dip, this is it, seasonality is going to kick in, like all that good jazz. Folks, I might play it in the bullish direction today, but I'm not really going to be doing swing positions. I'm not really going to be buying this dip yet in my overall account because I still believe there's more pain in the system to be had, especially with the uncertainties related to the tariffs, the trade war, the drug war, whatever you want to call it. So I'll be going over all of this with all of you in, I'm seeing some people say low volume. My volume's coming across exactly where it should be. I'm actually right in that sweet spot. Are you sure it's not just you? Can we get anyone else to confirm? Because my volume settings are like literally actually generally I'm either above this or below this. This is actually exactly where they're supposed to be. Before I continue, I just want to confirm, am I good? Am I bad? I mean, I hope I'm not bad because it's kind of jacked all the way up right here. It's low on, why would it be low on all of your ends, but weird on my end? But then other people are saying it's good. Other people are saying it's good. Here, let me check out one thing very, very quickly. Let me check out the gain. That is not right. Mixer, that is not right. Configure effects, sampler lighting. No. Where the fuck is the gain on this stupid release threshold? That is not right. All right, makeup gain. Okay, I turned it up slightly because some people already said it was good, but for the people who were saying it's slightly low, I turned up the gain slightly. So that should be a bit better, but not so much to make all the other people who were saying it was good angry at me. So with that being said, let's get rocking. Let's take a little sneak peek. Obviously, yesterday, horrible. It was kind of a historically bad day. It wasn't the worst day we've ever seen, but it's definitely up there. The SPY getting crushed. A little bit of a push into the end of the day. That makes sense because if you're watching the options flow, the fact that the 0DTE and the all expiration were so tightly coupled actually shows that the major delta movement was because of the 0DTE. So when people are playing puts on a 0DTE basis, you know they have to start to cover at the end of the day. So right here at 310, no surprise whatsoever that they basically started hitting in cash register. And it also happened right at the JP Morgan collar level. JP Morgan, every single quarter, they put on a massive collar trade, and it involves basically you have protection. The protection is here at 5565. You own the underlying, which is the overall market, and then they also have a call wall at the top. So it's kind of a three-leg position. The underlying stock, puts and calls, and the put side is right here at 5565, which is exactly where we bounced yesterday, and it's also exactly where we saw the 0DTs of the day start to get closed out, i.e. people like really starting to the cash register. So that's what that bounce was. Right now in pre-market trading, we're not really trending anywhere. I still strongly believe, especially if you're coming in right now, my official prediction on the day, and I would need the options market to confirm this, is a negative gamma Vanna-fueled rally. So I'll be explaining that closer to the market open, but I just want you guys to know that I'm looking for kind of a dead cat bounce today, and for the day, I'm actually looking to play to the bullish upside. But obviously right now there's a lot of motions, there's a lot of doomsday talk, there's a lot of people legitimately scared because the market's been hit pretty considerably. Wall Street fears Trump will wreck the soft landing. The economy's pilot has a new message. fasten your seatbelt. So obviously I want to get into what is and what isn't going on here. I do believe I explained it better in the update videos. The last 2 update videos, which come out after the market closes, and we also do one on Sunday night, really kind of gets in more to the nitty gritty. But we do have some on the political scale, a lot of shifts right now. US and Ukraine begin talks on path to possible truce with Russia. When we saw some of this news being announced on Thursday of last week, the market actually popped, reacted well. So probably something worthwhile to pay attention to. US and Ukrainian officials meet for the first time since the Oval Office spat, but Zelensky stays away. Apparently, he actually wrote him a letter apologizing, which I think is kind of crazy that we're at this point in a developed world. But yeah, I guess Zelensky, the reports as of yesterday, that he wrote him a note basically saying, sorry about that one. So just wanted to keep you apprised of this because we did see some market reaction to these news. So you might want to kind of have that on whatever your favorite news source is just to see if there's any breaking news. But bringing it back to what more of you degenerate traders really care about, stock futures edge up after recession fears triggered a market sell-off. Let me reload this because they're flat. Yeah, it gave up overnight bounce. So the overnight session was really interesting. Let me show you right here. This is the 30-minute. It actually got pretty bad, probably right when we were all going to bed. And then there was a nice bounce kind of in the Asian session. Right now we're giving a bit up. The 5-minute, the 10-minute, the 30-minute, and the 4-hour are all bearish. But if you rewind to about 7:30, there was like a legit shot that maybe we're going to get a bit of recovery. So I'm going to be watching that. I also have the kind of the overnight session, the high and the low marked out. So that's what these are on the bottom left of your screen on both ES and NQ. It is the overnight sessions, high and low. There are some interesting stats surrounding that of when you break above and when you break below, like what does that mean for the trading session? And the TLDR there is momentum begets more momentum. So just wanted to show you that right now we are basically break even on the SPY and the Qs. The SPY is slightly red, the Qs are slightly green, but let's see. I mean, who knows what it's going to be when the market actually opens up. How did this all happen? This sell-off that we saw yesterday, where $1 trillion just was removed from the value of the economy, it was all because of a press, or really an interview that President Trump did on Sunday with Fox News. And basically he was keeping the door way wide open for us having a recession. Trump doesn't rule out recession, suggests a period of transition.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time.
It was those right there. It's a transition. He's basically not confidently saying, oh, there's going to be no recession whatsoever. That all happened Sunday, and you guys saw what happened in the market. So this is all in the backdrop of obviously the tariffs, but it's kind of weird. Commerce Secretary Howard Lutnick says there's going to be no recession in America. Trump declined to rule out recession. Legitimate question for all of you. I get that Howard Lutnick is saying that there's not going to be a recession. How many of you believe it? I think it's pretty obvious that we're in a situation, and maybe I'm misreading the situation. Maybe I'm not reading the tea leaves here. But what? What? Why would he possibly say there's not going to be a recession? I get that, if asked, that's what you have to say, because it'd be really scary if they just admitted it. Same thing with the Powell. Powell can't come up on and say in a speech, yep, we're having a recession. But to go out of your way to say there's going to be no recession, I think anyone with eyeballs and a basic understanding of the economy and monetary policy and the stock market understand that we are going into a recession. The fact that that is just not everyone in the U.S. is base case right now, I don't understand this. I understand it. They don't believe it. They're smart cookies. They know what they're talking about. This is more of just the classic political swing of, spin, you just have to say what you have to say. And I don't think anyone in the administration or the cabinet or anything related, even on a secondary level, really believes that. I mean, I think really, truly, regardless of who the president was, it could have been Trump, it could have been Harris, it could have been me. Regardless, I think we were set up to go to a recession. Right now, we're speed running things because of the tariffs, but truly, the tariff situation or no tariff situation, the economy was on a path that we were going to a recession. So I want to be clear. I believe the actions of the current administration are speeding things up, but I truly believe that was our pathway anyway. It was just a question of when was it going to happen. But to say we're not going to a recession, it truly blows my mind. And it's crazy to say that when Mag 7 stocks sustained a total market cap loss of more than $830 billion yesterday, the group's single largest daily loss in history. So that can happen. The single largest daily loss in history, $830 billion. And they're like, nah, it's fine. It's fine. Don't you worry about that. And so that, obviously, the Trump speech happened on Sunday. We had a lot of rhetoric yesterday, and it got worse yesterday when we had this. White House stock market plunge is not a meaningful as business activity. So there was an outcry from the business community, please give us clarity on tariffs. And Trump responded and said, you have clarity. And then that was really confusing to the business community because they're like, what do you mean we have business clarity? And that's now getting to this point. Global stock sell-off ebbs as Trump to meet with U.S. CEOs. So Trump is to meet with the top business executives today, Tuesday. So at 5 p.m. after the market closes, we are expecting a business roundtable. So maybe some clarity is going to come out of that. But one of the major outcries from yesterday after the Sunday's interview when they were saying a transitional period and maybe we have a recession, maybe we don't. It was more on the business side of like leading companies. They're like, dude, we got to talk with this guy. We got to understand what's going on. So there might be some developments this evening related to the business roundtable. Once again, that will be happening an hour after the market closes today. This really coming into the weekend, why is it so crazy? Well, it's the tariff BS. U.S. could reach deal with Canada that avoids oil and gas tariffs, Energy Secretary says. So we're getting to the point in this talk where it's kind of getting like very, it's no longer just like a large tariff on everything. We're now starting to get to that conversation where it's going to be almost like field specific, niche specific. I do want to remind you that later this week, we are expecting to hear a little bit more about the whole silver and aluminum. And then don't forget reciprocal tariffs. That is early April. Trump paused until April 2nd tariffs on Mexican and Canadian imports that comply with the USMCA, in addition to broad duties of 25% on goods from these nations. Trump also originally imposed a lesser 10% tariff on the energy imports from Canada. So with this, I do want to remind you, we're expecting to have another tariff tax update this week, more in the world of metals. And then remember, April 2nd, right after OPEX, right after the end of the quarter, right after JP Morgan is probably going to get to roll their giant collar position, we're going to be hearing more about this idea of reciprocal tariffs. And the one thing I want to remind you is the reciprocal tariffs will not, if they happen, we're going to find out. If they were to happen, they don't replace the current tariffs of like kind of this pissing match that we live in. What they're going to do is they're going to be cumulative. They're going to be additive. So whatever tariffs are in place going into April 2nd, if this all were to play out, it's going to add on top, which obviously means they could get out of hand like relatively quickly. So just want to put that on your radar. With respect to today at 10 a.m., we do have a report, the JOLTS job opening. So we're going to get an idea of how soft the labor market is or isn't once again at 10 a.m. So this will be 30 minutes into the trading day. So if you're playing this one or if you're trading in the morning, you might want to be in and out before this, or you might want to just wait till this plays out. But at 10 a.m., once again, we are getting the JOLTS job openings. With respect to earnings, I mean, Oracle reported later this week. You have DocuSign, you have Ulta Beauty, but earnings season is pretty much over. But we did get updates from important individual companies, and right now in pre-market trading, Delta was getting crushed. Delta Airlines slashes earnings outlook on weaker U.S. demand, sending shares lower. And it didn't stop there. In the airline industry, Southwest Airlines will charge to check bags for the first time, launch basic economy tickets. Air travel is a tough business to be in, and right now when things get a little bit soft in the overall economy and really you just have consumers feeling a pinch in their checkbook, you're seeing these start to go wild. And it's there, but I covered this in the update video. It's not just airlines. Look at this. Tesla down 50% from the all-time high on December 17th, getting crushed. It was at around 475, hit 240. It's just getting absolutely spanked right now. I do believe that we are closer to the bottom in this particular leg. Like I said, my big thesis is that if we get any green this week, it's going to be a dead cat bounce. I believe we sell off into somewhere to the end of March. And then at the end of the March, I think we make a nice bounce and we have like a pretty bullish April. And then anything after April, I'm going to need more data to be able to predict such short-term ideas. But I still really, really strongly believe the end of this year, the start of next year, there's still a big shoe to be dropped. Doge chief Elon Musk says he's running businesses with great difficulty as Tesla shares tank. I think this is going to be a much bigger problem for him than he's currently anticipating, or maybe he fully anticipates it, but he just doesn't care. I don't know what's going on. But yes, I get that the overall market is getting absolutely rocked. But remember, Tesla is taking an outsized loss to the rest of the market. So with all that happening, you're going to have big players, big hedge funds, big insurance funds, sovereign wealth funds who are going to be looking at him and be like, what are you doing? Whether it is, even if he gave it 100% of his attention, this might have happened anyway, regardless of Trump and Doge and the White House and jumping on stages. But you have to admit, it's still kind of a bad look. You're able to kind of do whatever you want as the CEO if things are going swimmingly well. But as soon as people start seeing their investment go down and they're losing money, and then they feel like, okay, what's going on? And we always all like ask questions of like, what's prompting it? Like I said, maybe even if he gave it 110% of his attention and never did anything else, there is still some sort of likelihood that the stock would have been here anyway. But you have to admit, just from a PR perspective, it does not look good. It does not look good that people are getting rocked to the tune of 50% in a mere 2 to 3 weeks. Like half of that investment is now gone from mid-December to mid-March. It's just not a good look. It really, really isn't. So I think it's going to be interesting to kind of note the pressure he is or isn't going to be under from some of these large investors. But on that note, I should add that one large investor, ARK Invest, Kathy Wood, she went on a buying spree yesterday, and I would say it's noteworthy that she picked up quite a bit of Tesla and also picked up quite a bit of Coinbase. So I just want to throw that out there to all of you. Yesterday, it was an awesome day in the market for us, actually playing the right side. It was a bad day in the market, but when you bet a lot, that's going to be a bad day. Absolutely crushing it. So I made about $80,000. Right now I'm still posting Piper, but with the heightened volatility, I'm not selling premium myself. All of my trades are basically long premium. And here's how things concluded: just under $84,000. Felt like a really cool screenshot. Finally got the account above $250,000. But it was a really nice one-day gain, and it was a myriad of NDX puts, SPX puts, SPY puts, MSTR puts, and then some of them I ran back a couple times. But I thought this was astounding. I looked at that number, and just to realize that in one day of trading, I'm making way more than I used to make in an entire year's worth of work. It's kind of dumbfounding that that's even possible in this. So that was from all the swing trades. Obviously, all these swing trades are posted in real time, not when I get out, but when I get in and then when I get out. There's no Monday morning quarterbacking. Ask anyone in the Discord as expediently as I could possibly post it, whether it's the premium selling trades, which once again, I've been taking a break from it just because vol's so high, but I've been focusing on swing trades. They're all posted in there. And then you guys on the stream basically get to see all the futures trades just because they're a lot quicker. And like by the time I post it, sometimes I'm even out of the position, so I don't really post those ones. But anyway, if you want to join up not only with me and get my trades and the Piper signal and access to all the private lectures and access to the voice chat room full of great people who are trading throughout the entire day, your first month is 100% free. Use that promo code GOONIE, GOONIE, when you sign up on Locals. Locals is the payment manager. From there, all you have to do is sync your Locals email and your Discord. The steps are all over the place, but the point is that your first month you get full access to everything, and it is 100% free. As soon as you become a supporter, and you can do that for free with that code GOONIE, the Discord button's right there, or you could come to the second pin message and follow the links and the steps to do all the syncing. If you have any issues, reach out to me, media@MatthewKohrs.com, or DM me on Discord, MMK147. Once again, all that contact information's right here on Discord, MMK147, or email me, media@MatthewKohrs.com, and I will personally help you. Now, I understand that's not necessarily for everyone. Not everyone wants to be in Discord. You should sign up for Locals anyway. anyway, because you still get a lot of free stuff even as a member. And the major thing is every single weekend to your email inbox, you're going to be getting this Goonie newsletter. I break down the previous week, what to look forward to in the upcoming week. I call out all the major macroeconomic events. My ideas, I just wanted a quick little cheat sheet for you guys to be able to reference. And then also I give you the seasonality for each individual trading day, which is kind of the first thing bringing me to my bias of today. Tuesday, March 11th, over the past 27 years, this is the hypothetical equity curve you would have if you bought at open, sold at close on the S&P 500 futures market on this day. Over the past 27 years, the bulls have won this day 59% of the time, as in they have a 9% edge, and the profit factor is 2.57. So basically, every dollar spent has returned $2.57, and that's why the equity curve is going to the upside, because it's been a positive return trade to be a bull on this individual day. So seasonality isn't the end all be all, but it's something just to know, especially when it's not neutral, when you have a big bullish day or big bearish day, because there might be something going on in the overall system that prompts people to be bullish or more bearish on that day. So this isn't the most bullish day we've had, but today individually over the past 27 years, it has played out in the favor of the bulls. So that's the first one I want to bring to your attention. The next thing I want to bring to your attention is this concept called Turnaround Tuesday. I know many of you in chat have heard this before, but for those of you who haven't, let me just give you the rundown on the situation. If the first day of the trading week, i.e. a Monday, is down in excess of 1%, which we were yesterday, we dropped 2.6 and 3.8 on the SPY and the Qs respectively, the trade goes like this. If you're down more than 1% on a Monday, you basically go long at close or at market open and play the bounce back on Tuesday. This has, depending on the metrics that you're really measuring with, like, okay, like when do you take the long position, has anywhere from a 65 to a 75% accuracy for hitting. It is a profitable strategy. If you traded in no other way and just waited for Mondays to have a big drop in excess of 1% and went long all day on Tuesday, that is a profitable trading strategy. It's so profitable that everyone knows it. It's called Turnaround Tuesday. So I just want to bring that up, that yes, there is that very real possibility of the Turnaround Tuesday today. So thus far, let's review. Step one, what's the seasonality? Bullish. Step two, okay, we know that Turnaround Tuesday also favoring the bulls, and that's currently happening today. What's the other thing we should look at? The other thing we should look at is the fact that volatility got a little, by a little, I mean way too hot yesterday. It ripped all the way up to 30 and right into close. It kind of got hit, but there is a legitimate argument that does volatility itself need a little bit of a breather? Okay, a thing to consider, but maybe that's not like the most enticing reason for you to actually trade or develop a bias on the day. The other thing I want to bring to your attention is the movement we saw to the downside yesterday. The fact that the 0DTE and the all expiration were so tightly coupled together means that it was 0DTE trading that was moving the market. It wasn't bets for today or Wednesday or anything out in the future. So we saw that 0DTE trading, the green line, this kind of teal line, they ended up blocking in their profits around 10.10 right off that JPM collar, and we got a little bit of a bounce. So what's interesting is when you start to look at the difference between that and maybe things a little bit farther out, and you can see how there's just such a large delta between on the Mag 7, which was clearly not present on the SPY. So for this Friday, that's the closest expiration on the Mag 7. Once again, the Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla, they kind of sold until 11. And then since then, it just went flat. It didn't keep selling. And then, in fact, at the end of the day, we actually had some call buying right around 3:15. You have some call buying for this Friday and some all expiration call buying. So I want to just point out that differential of maybe yesterday was extreme, but think about now all that gamma, that delta, all those players are now gone because the positions expired yesterday. So I want to point that out. And then I also want to point out the fact that right now, we have a massive amount of negative gamma. So let me load this up. A massive amount of negative gamma. That's why this is all red. When you are in negative gamma, that is not bullish, that is not bearish. It means large ranges. It means if we get going in one direction or the other, it can really get going. So that could clearly benefit the bulls. It could also clearly benefit the bears. But in this particular backdrop, I also want to point out that the stability, even though it's lower, it's not where it normally is at 80 or 90, it's way higher than it used to be. Yesterday, when I was showing it to you, the stability, which is kind of like an inverse reading of volatility, it was basically down at 2, 3, 4%. We 10x that. So we have stability jumping up. We have negative gamma. We have seasonal bias that is bullish. We have the concept of a turnaround Tuesday, and we're opening up at a key level of 5,600, which now brings me to these key levels. Remember where did my high? Okay. The green, the red, and the white are yesterday's high, low, and close. And then from there, all these, I suppose, yellow, gold lines are the key option levels. So there are some on here that are more important than others. Right here, you know what? Let me just collapse this because this is a 10-point region. So I'll just call this one 30 just to clean up the chart a little bit. Really, it is a 10-point region of resistance. We are scheduled to open roughly where my cursor is, 5,600. The first target, which we know these are high odds plays, are hitting yesterday's closing value. On SPX, that is around 5615, 5616. On SPY, that is 560.58. So right out of the gate, that's a pretty easy play. The chances of hitting the previous trading session's closing value are very high. So that would be target number one. And then it gets exciting if we can push above and close above 5630 and hold it. Because from there, yeah, you have like a little bit of a speed trap at 5655. Once again, that's more of a 10-point region. But it gets really exciting when you start to think about, okay, we know that we're in negative gamma. So all of a sudden, if we go up, these market makers aren't going to have to hedge as many of the puts. So they're going to buy back their shorts. And that's how you get like a positive feedback loop. And I want to be clear, this can happen in both ways. If we start to drop, it could legitimately just get worse. But I'm trying to lay out the bull case that if we see this positivity in the options market, if we see calls being bought, and more importantly, if we see puts being closed, that's how you get a negative gamma Vanna fueled rally. And with this negative gamma Vanna fueled rally, we might legitimately be talking about 5,700 today. That would be my reach target, pretty much right in line with the high from yesterday. Beyond that, it could keep going. There is an upside gap fill that we could chat about, but we'll cover that if that starts to play out. What I'm looking for is right out of the gate, somewhere in the first 30 minutes, maybe including the JOLTS job reports, that we create some sort of strong foundation, start to knock on this door of 5630. And if we can hold this, there might be a good upside move today. Now, am I telling anyone to bet the farm on it and I'm 100% confident? No, but I think that's my reasonable case for the day. I think it has decent probability. I would never sit here and say it's guaranteed. I would never sit here and tell you it has 100% guarantee probability, because I don't know what the options flow on the day is going to be. I have to see what this flow is going to be. Are people buying calls? Are they selling puts? Are they doing it in size? Which side's more aggressive? And of course, maybe things switch. Maybe they decide to punt all of their calls and buy even more puts, and we dump and we go back to testing the JP Morgan collar position, which is pretty much the low of yesterday. It's actually at 5565. Yesterday's low was a perfect bounce off that JPM, the put collar position, or it's the put strike of the overall collar position. So we might go over there. If we crack that, then we're talking 5550 and more 5,500. You can see that there has been some interest on those levels. Right now, the highest open interest play on the 0DT is 5,500. There's more puts in the system right now than calls, so something worthwhile. Right here, you can see the open interest range. Someone's really targeting 5,500. But what's interesting about it is this is more selling. We have call selling and put selling. So really, what I'm looking for is, I believe there might be a shot of a bit of a bullish reversal today, more of a short-term thing, but it's not something that I would really view as a buy the dip opportunity. I truly would not. I think if anything, it's going to be setting up a dead cat bounce, because I'm still expecting there to be pain in the overall system as we are heading into the end of the month, and then I'll be looking to be a dip buyer. But with all that being said, diggity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. Remember, it's just money. It's all fake anyway. If the Fed can just print it out of thin air, why can't I? So what I'm going to be doing today is, well, first of all, I would have traded earlier, but I don't want to create a long position when the 5-minute, 10-minute, 30-minute, and 4-hour are all bearish. 5-minute, 10-minute, 30-minute, 4-hour, and all bearish. So really what I'm personally looking for is, not only do we take out the closing value from yesterday, which we're already making a push for that. I cannot really stress this enough. That's a very high odds play, especially when you're opening this close, and that's a nice 15-point play. So if you were to play that on the ES contract or something, that's a good chunk of change already. But what I'm looking for is a push and a capture above 5,630, which is pretty much, if you want that, the SPY equivalent level, the SPY equivalent level would be in the realm of like 561, call it. Like, can we push and hold above 561? That would be interesting to me for sure. But not only do I want to see that strength in price, I want to see, let me reload this. I want to see strength in the options market. And that one's key because yes, I can see we're in negative gamma, but to get the negative gamma Vanna fueled rally, well, we need to see equivalent strength playing out. So I'll be looking here, and we're going to be watching this a lot today. I want to see calls being purchased and puts being closed, and then that will set up the interesting like day trade. I want to be very clear in terms of the time frame here. If I were bullish, I'd probably ideally be locking it in today. Maybe I'd swing a little bit of the position, and maybe we get a 1, 2, 3 day type of a push, but I want to be very clear. I do not think this is the bottom. Even if we were to rip 2% today, I do not think that this is going to be the bottom. So I want to be very, very explicitly clear about that. Also, if you're just joining in right now, I want to remind you that at 10 a.m. today, in about 25 minutes, 27 minutes, we're going to be getting the JOLTS job openings. So we're going to get an idea that that's not the most important macroeconomic data drop or number, but it is an important one. So wait, if you're like, no, I'm more of a trader that I'm in the trade for hours. It's one thing if you're a scalp trader and you're playing this like a little up, little down, and you're going to be in and out multiple times before 10 a.m. But if you're more of a person who swings it for a couple hours, you might want to just wait for that announcement. Like I said, it comes out at 10 a.m. It's 30 minutes into the trading day. So you don't just wait for that. That could be the announcement that sets the tone on the day of, are we going to be bullish or are we going to be bearish? Also, to clarify, just to show you guys, to keep an honest person honest, I want to show you, I haven't traded anything yet today. In large disagreement with some of the people in, one particular dumb in chat yesterday. Yesterday was my first day trading all these pro accounts on Take Profit Trader and trading all these new Apex accounts. So this is officially day number 2. As I alluded to at the start of the show, I do have to play this one slightly differently today. I can't really do so much aggressive trend following because of the rules between unrealized versus realized, but that's just something that you have to do at first. And as soon as you build up a bigger buffer, then you can kind of do what you want. So I need to play it slightly differently today. And speaking of that, obviously, you guys know I'm trading on Apex. They are the partner of today's show. If you use that code GOONIE, GOONIE, pinned to the top of chat in the description of the video, you can get 80% off. After the market calms down a little bit, I'll explain this a bit better for all those of you who might have questions. But right now, 80% off. You could take the 50K test for about $33. And remember, you take the test, you have to hit a certain profit without having a certain drawdown. In a 50K example, you have to have 3K a profit without having a 2.5K drawdown. If you do that, you take the test, then you upgrade it from eval to PA. As soon as you have a PA, if you start trading well, that's how you get legitimate payouts. Year to date from Apex, I have been paid out 200 grand, and the accounts that I blew up in total, I was paid out 240. So if you trade well, and I'm not telling anyone that it's easy because it's still as difficult as trading in itself, but if you trade well, you can make legitimate money. And the one thing that's really exciting about it is if you trade well on one account, obviously you can copy trade up to 19 more. So if you're trading well on one account, your gains could be like literally 20 exits. So even if you make $1,000, you're actually making 20 grand, which is one of the coolest things that I find to be going on with these overall systems. So that's what I like about it, is the multiple. And then as you can tell, I've recently added 5 more accounts. So no matter what I do in a day, if I make $1,000, I'm actually making 25 grand because I'm doing the exact same trade on 25 accounts. Now, obviously, that's a double-edged sword. If you're trading poorly, that means you're trading poorly on even more. But that's how you can quickly really start to pump things up in that particular world, is by just how many accounts are going to be multiplied. Someone said NVIDIA is getting cracked. I don't see it. It's actually looking somewhat decent. It's up 1%. Coin's up 4%. Tesla is even in the green. I'm seeing a bit of green, but I'm also seeing vol go up. So be careful with that, because vol is rising. Vol's rising, and we're struggling at 5,600. If we don't quickly recapture this, I mean, the next legitimate thing is the low of yesterday, which is an additional 30-point sell-off, $3 in the SPY. So I would be paying close attention to how long we actually stay below this. The longer we stay below 5,600, which is a key technical level, psychological level, and a massive, massive, massive options level. There's a lot of open interest right here at 5,600. A lot of action, a lot of gamma. If we can recapture it, yes, it sets up that push to 5615. But the longer we stay below this, the more it's going to increase the likelihood of a puke to yesterday's low at 5564. Right here, it seems like it was a bit of an overshoot, and we're already bouncing back. Ooh, interesting. What's happening? Look at this. We're already seeing some nice bullish aggression in the Mag 7. Calls are being purchased. Puts are being closed. It's almost as if I told you it is what I was looking for. So I'm seeing some nice bullish aggression in the Mag 7. Granted, we're only 7 minutes into the day. We've been at these points before, and then we see it get like completely switched. But I just want to call out that we're starting to get into one of my major base cases. The difference here is that the Mag 7 is strong, but the SPY is very indecisive. Puts were bought, sold, bought, kind of sold, now being bought again. Starting at 936, some people started to get 0 DTEs, but not many. I'm seeing more trades happening on the put side, but right here in real time, calls are coming in. So it's messy on the S&P 500. It's bullish now on the NASDAQ, and it's clearly bullish on the Mag 7. So what I'm looking for is for strength to actually come in on the SPY. I wouldn't mind at all if the VIX gets a little bit clocked. And then that's where we're really getting for the setup where I'm very interested in the negative gamma Vanna-fueled rally for the day. I'm not making any projections for at this point for tomorrow or anything like that. I want to be very, I guess, concise and clear about my time frame. But as I said before the market opened, we are setting up. There is a lot of nice bullish potential on the day. Look at that. Making a run already to the closing value. If you decided to take that trade, congrats to you. It's a high odds trade. SPX is almost there, and the SPY already hit it. So both the SPY and the Qs opened below their closing value from yesterday. The Qs in the first minute hit the closing value. There wasn't much distance there, and the SPY just got a big pump here at 936, related to the optimism that we're seeing in the call buying and the put selling. The call buying just stalled out on the Mag 7. Now puts are being purchased, which is why we're turning in price a bit. What's happening here on the SPY? The SPY is really choppy. We're seeing the biggest movement in the longer duration puts. We see a little bit of 0 DT call, like right here. We're actually, the 0 DT calls are actually now the strongest that they've been all day. What time is it? It is 9:38. It is 9:38. How do I want to play this? I'm worried that we might be getting a nice setup today before that announcement. And I don't know if I necessarily want to be in the trade. I mean, if I get in and out before the announcement, cool. I don't really care. But we just had that nice bounce right there. We just had that real nice bounce. We are above VWAP 70. It's a 40 point. A nice bounce. All right, I'm going to take a stab at it.
Order submitted.
I'm going to take a stab at it. What am I in at? 40. Let's see if we can just get out at 600. Actually, you know what I need to do is be a little bit better than yesterday. And where's this? This is at 640. All right, so let's overshoot this by like 5 points. All right, remember, I care much, much more about my stop. This is way more of what I'm paying attention to is my downside protection. Obviously, if there's a big pump and it rips, but unlike how I normally trade where I'll trend follow, trend follow, trend follow, trend follow, this one, if we get a pump and it starts to pull back, I kind of have to get out quickly. This is a very nuanced thing between and it relates to the consistency rules of all this stuff. But that's why I need to try to keep my realized and my unrealized gains as close together as I humanly can. So I'm going to give this a second to breathe. I wish I got in a little bit earlier at 9:39. I just had a minute or two delay because I wanted to just double check what the options flow was or wasn't doing. So I see strength in the Mag 7.
My base case is coming in today was that potential for a rally. Maybe I'm early to it. Maybe they need to flush a couple people out. That's possible. If that happens, that's exactly why I have my stop already set. But I would be loving a push to 19,600. I would love for a little bit of follow through here. We push and it really just got stalled. Really, really got stalled. All right, let me move this over. Not the biggest fan of that. Dude, this feels like it's going to be, when did this happen to me last time? There was one time 2 weeks ago where I took the long position, perfectly came down to knock me out, and then it ripped from there anyway. Even if that were to happen, I can't really move my stop, because if you move your stop, that's when you get really, really into trouble with the concept of if it keeps going, that's how you lose up. Yeah, it's coming for me. We just didn't get that follow through, unfortunately. Well, this attempt did not work. Maybe it says, maybe I'll get a little lucky. Nope. Nope. It's coming for me. And whoop. No. Is it actually coming for me, or am I going to get lucky here? Am I actually going to get lucky? Wow. Wow, wow, wow. This recovery is actually clearly a better entry at this point, because you have less risk and you're playing the recovery of the EMA anyway. Holy shit. Dude, if this can pump to 30, probably should have waited for this entry right here, long around 16 rather than 40. Actually, I would have been in at 10 if I got the trade kind of when I wanted it. Instead, I ended up being off by about 30 points. And as you guys just witnessed, at least on attempt number one, I mean, knock on wood here, I don't know how this is going to go, but I just got absurdly lucky. Absurdly lucky. Come on, push it green. Push it green. All right, let's start looking at some of these metrics. Let's see what we have going on. What do we have going on? All right, a little bit of a pullback. Like I said, I find that you get much luckier in a general sense if you're trading with the trend. Speaking of which, the 5-minute, the 10-minute, and the 30-minute are not green, so I don't like that. But the 5-minute and the 10-minute are attempting to go green on NQ, and even the 30-minute testing. I'm very curious if we could take out this pre-market high, 19,585, and then on ES, it's around 5652. On SPX, we're having a tough time getting above yesterday's closing value. I am seeing a higher high and I am seeing a higher low. So looking for this push of 5616, and then that would set up my next target of 5630. This is where I think things could get interesting, and we might see more of the kind of negative gamma phenomena play out. But really what we would need to get the fun stuff going on the day is we want puts being closed, which right now puts are not being closed the most on the S&P 500, but they were being closed on the Mag 7. So we're not seeing as many puts being closed out as I would like right now, but we're going to see. Maybe I could just catch a little bit of something right here. I'm basically break even. I really don't want to risk much. I'd prefer it just doesn't come back below 18. This was the better trade right here, right around now in 43. I'm kind of off a little bit. I was like, man, what if this just keeps going? But I should have waited, and whatever. You never know what the next bar is going to be. You never know. You never know. To clarify, this is not my actual target. I just put it in there in case there is just a random news and it rips all the way up there. I care much more about this stop right here. This is really what my focus is, and that's just up there to remind myself to have an order cancels order on, and not just to let something run randomly. So that's what that's all about. But right now we're getting choppy. We got a nice push up till 937, and since then we're just chopping sideways. I was hoping we had a continuation, but things just stalled out. I'm getting chopped alive, and this feels like the second time it's now coming for me. Unfortunately, what's happening in the options market? Options market. SPY's getting hit, but the options are actually trying to recover a bit right now. Come on, don't put in a higher low. Don't scare me like this. Don't scare me like this. Put in a nice higher low. Options got smacked again right at that. But what's weird is they're actually holding somewhat decent. Like they're holding. Oh, is this coming for me? Come on. Get a nice pop. What I'm worried about, like the brutal scenario for me, is if the SPY and the Qs just like kind of briefly flush these recent lows and then rip. That's the situation where I get screwed and I'll just be angry about it because it'll flush me out, then rip anyway. So I'm just really, really hoping like 474 can hold. I'm really hoping 560 can hold where we're at. I just don't want them to flush these recent wicks and then take off. If you flush them and actually sell off, whatever, that's what I have the risk for. But it was about a week and a half ago, I believe I streamed it to you guys, where there was that situation where it like just wicked me out and then ripped anyway. So I was right. I just got a little bit unfortunate with it. You can't really prepare for those types of things because like your stop's there for a reason. Ideally, it's set at a level that if it cracks it, it might actually like really go against you. So you have to protect yourself. But it is just obviously frustrating where you get those situations where like it barely gets you out. It's kind of like the aw shucks type of a thing. So I'm not loving that ES is still fully red, but I do like that the 5 and the 10 and the 30 are trying to push on NQ. This is the tough, like, it's just for whatever reason, SPX is like really struggling to get above the closing value from yesterday. We tested it. This is exactly why we marked these levels out, because they tend to be important, but I am liking the overall slope. We are getting higher lows and the same high. So we're kind of getting a little bit of a wedge, and I'm hoping if we break that, it's a quick pop up to 5,630. And most importantly, I'm hoping it happens with a lot of puts being closed. I very, very much need those puts to be closed. Looks like I got lucky again here. Didn't quite come down to me. Man, that would have been a better trade too. Yeah, that was just a little bit chasey. I should have known. I should have known to wait on that one. I should have known. All right, now we're in the green. Come on. Come on. Oh, okay. Come on. All right. 40. All right. We are. I got to pay attention now, team. Got to pay attention now. Come on. Come on. No, not the biggest fan of that. No, not the biggest fan of that. All right, a little bit of a tiny flag here. If it could take this out, I'll be feeling real good about the position. Take out that flag. Go, go, go. Get a little bit of a recovery. Okay. I'm moving my stop up. Stops in the green, so no matter what, I'm making money. But I am at that point. Oh, I wonder if I should just take 600. Come on. I need a little bit more volatility. I'm worried about these pullbacks. Come on, test 600. We had that nice breakout. Getting a little rejected at 600. Fight it back. Tag 600. Okay. Come on, you could break it. You could break it. The really tough thing here is like the accounts are so new that I can't afford like breathing room if it gets rejected and pulls back hard. That's the frustrating part. Oops. Come on. Options flow. What time is it? All right, we have 10 minutes till that announcement. I would love to be out before the announcement because who knows if it just goes against me. And once again, I don't have much buffer to play with, like it pulling back against me. Come on, we're struggling at 600. Let's do a quick sanity check. 5 and 10 are testing on ES. 5, 10, and 30 is now testing. We did take out that pre-market high. Oh, we're getting a little bit hit right here. Shit, I didn't realize that. Knocked me out.
Order canceled.
Knocked me out. Okay, locked in about 350 on each account. I had to be very, very aggressive with the stops because I just can't let stuff pull back that far. And even that pullback's a little bit more than I wanted it to be. What is this? The auto, the peak is 300. Yeah, so right now it's up and then it goes anyway. But see, you don't know because if it pulled back, like I could have withstood something like that. If the accounts were just a little bit larger in terms of like the buffer that I had. But it just, I don't know. It took out that recent low. And I think that was actually pretty strong just management. Like I just have to be a little bit careful. So with it, I try to keep myself to 2 trades a day. If I see one more opportunity, I might take it. It's just a bummer. That actually didn't even hit 600. So I can't even say like, oh, I would have taken it. It got hit at 599. So as soon as it broke that recent low, I was just trying to be smart because you don't know. The next bar, the way this was a big green one, it could have been a big red one. And then instead of making money, I could have been losing money. And if the accounts had more buffer, I would have held through it. I would just be in this chop this entire time, and I would wait to see how it plays out. I just am not afforded that luxury at this current moment. Just got to be a little bit more, I just got to wait. So like at this point, we're 7 minutes out. So I'm not going to throw on a trade now until we get the JOLTS job reports. So maybe the JOLTS job reports will actually create a good trend that I can play off of. But even this, yeah, we're dipping. I mean, I was in at, 40? So I'd actually be back. So all that money was up to 1,200. It would have pulled back. So I had to be defensive. I had to be smart. Unfortunately, when these accounts are the most difficult to trade when they're new. That's like kind of the brutal aspect of it. Maybe I should have just taken them off at 90 because that would have been $1,000 per account. I guess coulda, shoulda, woulda. Coulda, shoulda, woulda. No crying about it now. So at this point, I'm just going to be waiting for this JOLTS job reports, and probably that's what exactly the market's also going to be looking for. Try to get going. We try to make a run. Hit 25. 25 is a key level. Really, remember I said this is a 10-point region. I put it at 30, but in pre-market I had one at 25 and one at 35. This is a 10-point region of like some messiness. So I don't want you to think exactly 30. Like I said, it was in the pre-market breakdown. I had one at 25, one at 35. It's a 10-point region of messiness, and that's exactly what we hit. We hit 26. So we got into the region and got smacked, and right now it looks like the market is just kind of awkwardly awaiting the JOLTS job reports. It really started to dip right there. Oh, I'm so incredibly happy I got out. Granted, like I could have, like whatever. That's Monday morning quarterbacking. I think right here when it first showed weakness to get out, I actually think that was a good trade. It sucks the dynamic of some of this, like the pullback rule, because where did I get out? I got out at 60. It went about 40 points higher. So that's like hurts me by like about 800-ish, but whatever. C'est la vie. C'est la vie. What we are waiting for right now, which is coming out in about 5 minutes, I don't really think if you're like, oh, dude, I'm about to execute a trade, I really don't think there's a point in that because we are about to get the JOLTS job numbers. So we don't know if they're going to be good or bad. It's basically a 50-50 test. So to be throwing on a trade right now, I just don't think it's the most statistically advantageous for you unless you're just feeling lucky today. Unless you're like, you know what? Lady Luck spoke to me last night and you're just ready to go. But right here, JOLTS job openings, the forecast is 7.65 million. Comes out right at 10 a.m. That's what we're waiting for. I wonder if they're going to bring on Rick Santilli to talk about it. Or are they going to bring on our boy Rick? A little bit of an overshot. As a technical trader, there was a breakdown opportunity to play right there. A little bit of both the SPY and the Qs broke down. I wouldn't have the balls to play that today, though, because it's indecisive. The ES is bearish, but then NQ tried to go bullish. So you have one bearish, one bullish. Things aren't really aligning. The less things that align, I find that your odds really go down. At this point, we got smacked at resistance after taking out that first bullish target. And not only did we resistance did not turn into support, but it looks like we're getting pushed down to this next level. So this is all coming down to let's just wait. Let's just wait and see. Can we recover above the trend line? Can we recover above the closing value from yesterday on the SPY? The Qs want to get going. And that's exactly, well, I showed you once again in pre-market, but we saw a decent amount of longer duration calls being put or purchased in like the last 30 minutes of trading yesterday. Interesting to see like this nice push for the first 15 minutes. Since then, it's choppy. My best guess is maybe it was the first 10 minutes. Things got like, we tried to get this breakout. It failed. We're just waiting now. We're just waiting. We are just waiting for hopefully Rick to come up, but more importantly, the JOLTS job reports. I have no particular prediction right now. All I can tell you is as soon as it either does or doesn't come out, I will be looking at the options flow right away to see what in the world is going on. We are above VWAP on the NASDAQ. The VWAP's all the way down here, the value weighted average price. It's thought to be bullish if you're above it, thought to be bearish if it's below it. I don't think it's the end all be all trading indicator or anything like that, but it is, once again, the more things you can stack in favor of your trade, I find you get more lucky. So if the price trend's in your favor, if the EMAs are in your favor, if you're on the right side of VWAP, if options are in your favor, you get more lucky the more things that already align for like the particular direction and sentiment of your trade. And other than that, we're just kind of waiting a bit here. So while we were waiting for this to come out, like I said, these accounts that I'm trading on, it is from Apex. You can see I have 20 Apex accounts. I'm up about $350 on each of them, which is a cool 7.2K. So 7.2K locked in there with another 1,500. So I'm up around 9.5K today on all of these accounts from that first trade that I showed you. So happy with that. If you want to use Apex right now for the next 2 days and 16 hours, you can get 80% off on the test if you use that code Goonie. Pinned to the top of chat in the description of the video. If you use code Goonie, you're going to get a discount. I try to keep my coupon code the same everywhere. So whether you're signing up for the Discord, Apex, Spock Gamma, Take Profit Trader, whatever it is, generally Goonie is the code that's going to get you the discount. So you want 80% off. It lasts for another 2 days. I recommend starting slow, kind of learning how the system works. And then when you feel comfortable with it, that's when you can kind of scale up to the 20. There's many different account sizes. The most popular is 50K. And generally that is my favorite. Right now I'm using the 150K just to see if I do or don't like them better. But 50K is by far what the most popular is. It's also what I was using on the last journey with Apex. And remember, to pass the test, you need a 3K profit target without having a 2.5K drawdown. Generally, it costs $167, but with 80% off, it'll only be $33. So it's actually a nice fat discount. And then from there, when you pass the test, you go from eval to PA. When you're on the PA account, a performance account, that's where if you trade well, you can get payouts. Per account, and remember, per person, you could have 20 accounts, but per account, out of the first $25,000 in profit, that's all yours, 100% yours. And then after that, it's a 90-10 split where you keep 90% and the company keeps 10. First 25K is yours per account. And remember, each user can have up to 20 accounts. You can get a payout every single 8 days. I like it. I think it's a solid low risk way to engage with the market because your other option is to fund your own account. So with paper trading, there's no risk, no reward. And that's kind of like a good way for you to learn about the market. And when I first started trading, you had to go from paper trading to just your own funded account. You're risking everything you put into it. Report came out. At first, bad. There's our boy Rick talking. Initial reaction down. Initial reaction down. They're on a commercial break. Initial reaction down. Will it recover? Getting smacked. Obviously, the numbers were not that good. Profit, what do you have for me? 7.74. They expected 7.65. So there's more job openings than anticipated. Initial reaction down. And now coming back. Dude, look at these ranges. This is crazy. Awkwardly waiting to see if they have anything to say about it. Initial reaction, just a puke, and now we're already back above the range. That's crazy. That's absolutely crazy. And look at it now. All right, now we're coming back up to that trend line that we broke down from at 953. This is actually a really good example of why I had to have that stop, because even though I'd be green right now, this wick would have blown out all my accounts.
Walk on the street. I'm Carl Quintanilla with Leslie Picker and Michael Santoli live at Post 9 at the New York Stock Exchange. David and Sarah on assignment.
Calls are being purchased in real time. Puts are being
Nasdaq
closed.
Trying to get to work on that, up about 0.5%. Some of the corporate guidance coming in a little bit soft, especially regarding travel, but it's not all red. And the 10-year just around 4.25.
Unfortunately, the movers we're watching this morning not experiencing that rebound. We're about 30 minutes into the trading session, and here are those movers. Dick's Sporting Goods and Kohrs under pressure after disappointing guidance from...
They're not talking about anything too fun. So initial reaction, I mean, we could go to the 15-second chart. Initial reaction was clearly negative. We had this gap down right at 10 when the announcement came out, flushed a little bit more, then we pump. Now we're giving some back. Will it be able to stabilize, put in a higher low, and then bounce off of it? That's kind of my interesting watch right now. So initially, it got rocked, found support at 5,600, quickly recovered up to yesterday's close, pushed even more, got clocked at the next resistance. Remember this 10-point region between 5,625 and 5,635. This is all resistance. That's the second double. So really, what? We've quad bottomed. We've overshot 5,600 twice, double bottomed, and now we've gone up to resistance twice, double top. So we have a double bottom and a double top. Initial reaction bearish, then it went quickly bullish. Now it's going bearish again as the bots are fighting this one out and trying to decide if this is actually bullish or bearish. Patience on this one. What is the flow doing? Interesting. So it's getting clocked, but the options flow is actually holding pretty steady on the Mag 7. Same situation on the S&P 500. So I see that it's flushing right here, but just be careful because the options market doesn't necessarily agree with it. At first, it got rocked, and that's because the bots misinterpreted the news being good or bad. Then the dip buyers came in. It's getting hit a tiny bit right now, but the price hit is way dramatic relative. Options are not agreeing with this flush, which means just wait. Just wait. If it is truly weak, well, there's probably going to be a bounce opportunity. We're going to see weakness in the options market. Then we could play to the downside. That's totally possible. But I wouldn't be chasing this now at a low after all this crazy reaction. I mean, this is just absurd reaction. We went red. We went green. Now we're getting flushed. It's all over the map, which is this is the perfect example of why I was telling you guys, you got to wait for this to come out. It's, all over. If you were playing this on a prop account, either way you played it, you would have gotten blown out unless you had a huge amount of buffer. So I feel extraordinarily lucky that I actually got out of it. How high did we end up going? We did go to 600, but we dipped all the way to 466. So that was like a 140-point differential. Even though if I had a lot of buffer, I could have hit that 600 mark, but I would have been blown out before on the current account size. So I don't feel bad about my trade whatsoever. In fact, I'm actually feeling pretty good about how I played it. Feeling pretty darn good. SPY fresh low. And it looks like we are now officially making a B run to yesterday's low. 5,600. Watch this, 5,564. This is the next target for sure. And then there is a key options level at 5,500 as well. These are, I would suppose, after that rejection at yesterday's close, triple whatever bottom, quad bottom, whatever you want to call it, 5,600. Target number 1. Target number 2 is at yesterday's low of 5,564. And then the next overshoot target would be 5,550, which is a key options level. Also just a psychological level. People recently have really been seeming to love to play these, the 50 rungs, like 50, 600, 650, very popular levels to play. But let's see. Here's the flow. I'm not chasing to the downside, first of all. Like chasing just generally not a good idea. But more concerning is that the options don't agree with this. So if you're sitting there and you're like, I just got to swing puts, maybe it works for you, but I'm just letting you know the Mag 7 options traders, they don't agree. And the SPY options traders, they agree a little bit more, but not as much as you probably want them to. Okay, hang on. Now that this loaded, there was a dip to a new Delta low. But in real time, puts got close. So Puts got closed on that dip right there at 1004, 1005. Dude, I'm telling you, I don't necessarily think this is the thing to chase to the downside. We are getting these large moves because remember, whatever way we go, it's going to get more extreme because we're clearly in negative gamma. That's all the red here. So don't be surprised at the size of it when you're like, oh man, we win so much, that's bearish. Oh, we win so much, that's bullish. No, we're just in negative gamma. So whatever way we go, the market makers are inherently going to make it a bit more extreme. VWAP recovery. A VWAP recovery. Ooh, we're seeing a little bit more optimism in the options market now. Look at that. Some calls just came in. The delta's popping now. So a huge delta. So an initial delta puke, then the delta pop when price recovered. Then there was a huge puke around 1002, and then that turned off at 1005. And since then, we're popping back up. More specifically, it is call buying. Some 0DT calls just came in at 1006. 1006. Which is bringing us up, surprise, surprise, right to 5,600. This should be an interesting test. If we can get above and hold above 5,600, oh, okay. Or maybe we're just going to get rejected at now support, now turn resistance. So once again, all eyes are kind of on this 5,600 level. There's quite a bit of open interest there. So let's pay attention to that. Let's also pay attention to what's the biggest volume over the last 15 minutes. Biggest volume over the last 15 minutes is actually 5,650 and 5,550. Those are the two major nodes with some smaller nodes at 5,560 and maybe like 5,630, 25. That's why I have that region kind of marked out. So that's the major trades over the last 15 minutes. Obviously, I just want to capture the data from that announcement. 5,600, 5,620. So interesting. Interessante, Batman. Let's go to the 30 second. Decisions. 5, 10, 30, 4-hour are bearish. NQ is already back to trying to test. Look how brutal that 10-minute bar is over here in the top right. New high, new low, all aggressive. I have to admit, that kind of does entice me. Right here, we're right on top of VWAP. So we puked, we pumped, bigger puke, a pop all the way up to VWAP, potentially put in a higher low right here. I'll take a stab at it because it's such a low risk opportunity.
Submitted.
Such a low risk opportunity. Why not? Why not? Come on. Come on. All right. Taking all risk off the table. My stop is above break even. Maybe I'll get lucky with a push right now. I just can't have it come against me that much. Come on. Can Matt get lucky with the push? I just need to get myself out of this buffer zone. Come on. Don't pull back. Just give me a nice follow through. Like just a God candle to the upside. I just can't have that much of a pullback. Fuck. I'm trying to give it a chance. It's just like you have to be, there's a good mixture of luck when you're first trying to grow these accounts. If I had a bigger buffer, I would not care at all. All right, moving my stop even higher. I have to be hyper aggressive with these. It's just how it is when you are in the doghouse the way I am. I need to be hyper aggressive. Come on, just one more pump. a nice pump. Let's take out 53, the 1 standard deviation move. Nope, I'm out. All right, up
Order
800.
filled.
I'm done on the day. This is a little too choppy. I'm frustrated because I do think there's good movement in here, but I could already tell in myself that I'm too much in my head of like this drawdown. And dude, I mean, fuck, like I really do think this goes. I mean, if I had room to swing, yeah, no, it's still support. I'd be looking. I mean, I think there's a phenomenal trade on this breakout trade right there. Like if it can find support, if it could go, it's just, I just don't have that much leeway to play with. Currently up 16.2 plus another 4. So I'm up 20K. I have a 20K. Like if you add up all these numbers right here, I'm up 20,000. So I might just need to call it there. I was trying to get lucky with one nice push. How far off? Did it? Oh, actually, I'm really happy I got out where I did. I'd be back to break even. My peak and where I'm at are off by about $400 or $500 the way they were yesterday. Which isn't bad because the accounts are still slowly growing right now. So it's something that's manageable. Something that is manageable. It's just, I thought there was this recovery and it's getting smacked. That's what happens when you have an indecisive market. Maybe I should just take that as a brutal lesson right now, that the indecisive market is kind of what's dominating. All right, I'd be watching this trend line. I wouldn't be watching the spike necessarily from the news just because like sometimes you have those overreactions. So if you're bullish, maybe you look for this trend line, the push above the trend line, but it does look as if the SPX is having a tough time at 5,600. It does look as if it's having a pretty freaking tough time. I wonder if we're just going to come back. Watching that trend line. Here's the look at the flow. Actually, what was that? So some puts are flat. People aren't closing out puts on the Mag 7, but they are buying some calls. They were buying a lot of calls for Friday up until 9:50, and since then, people are choosing to buy calls for farther out. Bringing our attention to the S&P 500 complex. 0DT puts were purchased until 10:04. Some of them were locked in, and then they were purchased again. So that's actually some bearish aggression. But on the flip side, you actually do have legit bullish aggression because you have a nice trend of calls being purchased. So that's why the market's so indecisive, is because it's not being dominated by one player. There are puts being purchased and calls being purchased, both on 0DTE. So someone's wrong. Like when the trend finally gets going today and we develop it, it's going to be a gnarly one, because not only are we in negative gamma, so inherently we know the market makers are going to be supportive of whatever move happens, but on top of it, you have half the players being wrong on the 0DTE. Either the calls are going to get closed out or the puts are going to get closed out. So that's going to add even more fuel to the fire. And you can see calls are getting stronger, puts are getting stronger, and then the net effect on delta is pretty much nothing. So you just got to wait. We technically, well, that's a higher high and a lower low. So when you have a higher high and a lower low, basically it's the worst setup, because some people call it a microphone pattern. Really, it just means price is expanding, volatility expanding. That's the only way you get higher highs and lower lows. The price is getting more extreme, which obviously some of that was prompted right then because of the news. It's also getting prompted by the fact that we're in a hyper negative gamma environment, and it also isn't helping at all that people are still aggressively buying calls and aggressively buying puts. So it's just right now, I don't think I tried to take a stab at it, as you guys literally all saw in real time, just in case a nice trend was being created, but we're just not getting it. I mean, right now, if you wanted to, you could just look at the range created from this announcement and honestly wait for like the range to break. That is like one thing you could do if you wanted to be like real conservative with it. This is all the range from here in the white box. That's the range from the JOLTS job reports. Like clearly we are just within it. We try to push and we try to push again. And right there, we got halfway back up the range and then it got smacked pretty hard. The NASDAQ is attempting to hold VWAP right here. Might be a shoulder, head, shoulder, or it might just be a double bottom at VWAP. Like, you can look at this stuff a million different ways, and generally the person with hindsight is like, yeah, no, I was right. But like I said, this could be a shoulder, head, shoulder. It could also just be a VWAP bounce and we pop. I mean, we're at an EMA line. It could be a recovery. Like, you could look at it a ton of different ways. A ton of different ways. I just wish the options market would give us I wish one of the sides would stop being so strong, because the fact that they're aggressively buying puts and calls means both sides are really battling it out today. And if anything, we're now kind of going flat. So you just got to wait on that one. But in tech, the tech strength is getting more. Remember, the earliest these expire this Friday. These are 0 DTs because the S&P 500 complex has options that expire today. If you look at the Mag 7, the closest expiration on the Mag 7 is going to be for this Friday. So the 0 DT in the Mag 7 structure is actually this Friday, because Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla do not have any that expire today. So we're kind of stuck in purgatory at the moment. We're kind of stuck in purgatory. So, I mean, this is the extreme of the region. I'll just leave it marked out on what the extreme is. And the SPY is a bit weaker today. The Qs are having a bit of a stronger bounce back, but I guess I'll leave that trend line up just in case we kind of get back above it. That could be an interesting signal. Tesla's going flat. NVIDIA looking a little bit weaker. MSTR was flat, then got hit, then tried to bounce. Palantir, everything's just looking messy right now. It doesn't look like we have that nice trend that we could just be riding and riding and riding. And remember, most days are actually choppy bullshit. You kind of want to be patient and wait for those big trend days, or hope that there is a big trend day. And if you catch it, ride it, ride it, ride it. Because those are the days you need to pay off all like the bullshit chop pain that you get hit with. Bonds are going up, so yields are going down. So people, there's actively a flight to safety on the intraday. People are going into bonds. Bonds are up, yields are down, flight to safety move, and this is the 20-year. Oil's up, interesting. Gold as well. All right, so I'm either waiting for this trend line to be broken and captured, or for a fresh low, either the trend line and a fresh high, or we just take out the fresh low. But I don't think there's really, I mean, I know the past couple days, like, it's just been trade, because like there's been so many good setups. But right now, I don't know what to tell you. It's just not setting itself up. It really isn't. And I think it's when you start to force those trades that you really start to get screwed. Maybe you see the market a little bit differently than I do, but I mean, all the quantitative measures that I truly believe in the market right now are suggesting a choppy mess. They're so quickly going from slightly bullish to slightly bearish, slightly bullish, slightly bearish. It's just an absolute mess. Just an absolute mess. So that's all right. That's all right. We just got to wait. We just got to wait. What is this? Are we going for that trend line move now? Do we have any? Let's go to the 30. Let's go to the 5-second. Options just got a pop. Right there, puts started to get closed out at 1017. We're still near the low of the day, but that's why we see. So puts getting closed while people are still buying calls. So you're removing negative delta, adding positive delta. And that's why we're seeing the delta go up. Removing negative, adding positive as the 2x effect on this pop. But we're not, like, price got a little bit of a pop on that. But obviously we didn't even make a fresh high, and the delta didn't even make a fresh high. So there's a little bit, and the Mag 7 is just so boring and sideways right now. What about the NASDAQ? The NASDAQ popped, got dropped, popped, got dropped. Maybe trying to pick up in real time. Maybe. Where's SPX at? SPX is hanging just below 5,600. Maybe we're putting in a higher low. You might want to watch this trend line. If you're looking for a short position, a breakdown of this trend line might be advantageous for you to play. If you're looking for a bullish trade, you might be wanting to look for a breakout of this trend line. So we're just kind of stuck in this wedge. Breakdown, breakout. Ideally, the break is also currently with the same Mag 7 just got a nice pop on something. Longer duration calls were just purchased. Not calls for this Friday, but someone just slapped some size on the longer duration on Mag 7. And these are just flat. Just wait. Just wait. Chill, 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 chill. Are we currently getting a massive discount on everything, or the fall continues? I think it continues. I've made multiple videos on it. I don't think my thoughts are hidden from anyone. Just waiting. Just waiting. Also, don't forget the random risk of a Trump tweet or True Social update or any updates in or tariff wars or Doge or the potential government shutdown that is looming for, I believe, this Friday. So one of those things could also, maybe not as extreme as what we saw at 10 a.m., but it could cause a little bit of craziness as well. So another thing to strongly consider. I'm just kind of watching VWAP here. Are we going to recover? You know, it's a more of a pinning day when we just are going above and below VWAP over and over again. I could probably best show you on this. Here's the 500 tick chart. Remember, the white dash line is VWAP. So early this morning, we were above it, got knocked all the way down to it at market open, bounced off of it, came almost down to it, bounced even stronger, overshot it, recovered to it, recaptured, tried to push, failed, tried to push below, failed, tried to push below, failed. Like it's just clearly we are just trading around the average price, like as in we're not trending. The VWAP itself, the volume weighted average price, is perfectly going sideways, and we go a little bit above it, get smacked, go a little bit below it, and they are buying it back up. Classic lack of trend. The EMAs are a little bit more down, and that's because of the SPY is a little bit weaker. The 5, the 10, the 30, and the 4 hour are bearish. If you look at the NASDAQ, multiple times today, it tried to get going. I mean, we even took out this pre-market high. It tried to get going. It just keeps getting smacked every time it goes above VWAP. So there were some moments of excitement that maybe the tech sector would be strong enough to get a recovery going in the SPY. We're just not seeing that right now. We are clearly not seeing that at the moment. That's bearish. That's a bearish breakdown right there. If you're looking for a bearish setup, I'm a little bit too nervous to take it myself, but that's pretty reasonable. We snapped the trend line, we snapped that recent low, and you have well-defined risk. It doesn't get much better than that. You have well-defined risk. You have a well-defined target. You're trading with the EMAs. Well, even these EMAs are now red. I mean, it is a breakdown. I'm not in the most love with it because the Mag 7 is still pretty strong, even though price is now coming down. And even though price is coming down, the SPY is still just kind of flat. Like, these trades are way, way easier if multiple things are in that direction. So when I see some indecisiveness across the board, it just, I don't know, it kind of freaks me out. But if you're just purely a technical trader, yes, of course, that would be a technical entry for a short. You have well-defined risk. You have a well-defined target. The reward to the risk ratio is optimal. You're trading with the 5, the 10, the 30. You're trading with the 5, the 10, the 30. The only thing that's not really agreeing with you is the options flow. So if you're a person and you're like, you know what? I don't believe in options flow anyway. That might be that opportunity you're looking for. I happen to be a person that does believe in options flow. So I'm not going to take it, and maybe I miss out on an opportunity. Even at this push, I mean, by the time we take out the intraday low, you could just move your stop to break even and maybe even ride this a bit more. But for me, it's just not enticing enough. Not enticing enough. I'm more interested in the potential recovery, but we're just not. As I said before the market even opened, the major thing I was looking for is for puts to get closed, and they're not getting closed. If anything, they were flat until 9:45, and then since then, puts were being opened. So I can't even say puts were flat. They were doing the opposite of what I wanted to see for a Vanna rally. Now, granted, we're not even an hour into the day, so maybe things do change, but a snapshot as of the current information is, I would say, choppy bullshit, but slightly favoring the bears. That's my profound breakdown on this, but more so chop than anything else. And there we go. There we go. That would have been a nice trade. At this point, you can move your stop right to break even and just praying for that follow through. The globalists are pulling out and shorting everything. I believe Trump is using the globes aggressiveness in making the economy look bad to force Powell's hand to the globalists. This whole globalist thing is like such a boogeyman argument. That's just like a term that for whatever reason everyone's picking up right now. The globalists. No, this is called just having a basic understanding of what tariffs do to the economy and the stock market in the short term. Like, it's not the globalists, like the globalists. This is such a rudimentary. I mean, everyone in here who was doing a basic understanding of the market was taking short positions yesterday, either via going long puts or legitimately shorting. That doesn't make people globalists. It makes people having a basic understanding of what these overall updates do to inflation, to monetary policy, looking at price trends and breakdowns, looking at the option structure. That doesn't make him a globalist. Like, that's so it's so silly. It's just such a it's a boogeyman argument. I'm just like, yeah, that's the person who's the problem, and like then they don't even know what a globalist fucking means. Like, come on. Globalist is anti-American interest. Okay, cool. Once again, anyone who has a basic understanding of the economy's interaction in the market has known for a while that pain is coming. That doesn't make it a globalist. It makes a very, like, it's not even like a hyper complicated understanding. It's literally just a basic understanding of what this is going to do. And it's short-term stuff. Like, I think everyone freaks out about short-term moves, but it's just, that's what it is. It is a short-term move. You'll get it. You're cute, Matt. Naive, but cute. You'll get there. No, or maybe I actually know what I'm talking about. I'm on this side of it. You're on that side of it. I'm very, very confident in my understanding of the economy and the stock market and what tariffs do and what's going on with the yield curve, what's going on with yields and bonds. I would be much more confident in my understanding of the market's interaction with all this news than yours, without a doubt. All right, fresh low right at the low from yesterday on the SPY. So this is going to be telling of, this is, we kind of went from bearish target number 1, which we've been hitting multiple times. Now we're setting up on bearish target number 2. And this trade right here that we called out, I didn't take it, to be clear. I did not take it. Kind of wish I did, but I just wasn't really liking that. Options didn't agree with it. Puts are now being purchased again right here, starting at 10.20. It's the damn globalists. The globalists are buying them. Man, those darn globalists. I bet it's the globalists too that are buying calls and pushing the market higher when there's quantitative easing. Those damn globalists trying to make whoever the president is in control look good. You announce quantitative easing, you give everyone a stimulus checks, and it was those fucking globalists trying to make everyone look good. In April of 2020, when the market was just absolutely ripping, it was those fucking globalists trying to make Trump look good. Had nothing to do with stimulus checks, had nothing to do with quantitative easing. It's those globalists, man. They're all just punting long calls, ripping it. They fucking, if I had $1 for every time those globalists try to do something, dude. Oh my God. Dude. You guys are fucking sipping on the conspiracy Kool-Aid today. The fucking globalist. Yeah. 50% increase on tariffs for Canada? Wait, did that just come out? Breaking, Trump, I've instructed Secretary of Commerce to add additional 25% tariff to a total of 50% on all steel and aluminum coming into the U.S. from Canada. That was 27 minutes ago. So that was right. Oh, we pop. Interesting. I didn't realize that. So the initial reaction to the JOLTS jobs was weird because the bots didn't understand. Then we popped, and then everything started to break down around 10:01, 10:02. Do you know what happened right there? Once again, breaking. Trump, this is from Trump. I have instructed Secretary of Commerce to add additional 25% tariff. So it's now cumulatively 50% on all steel and aluminum coming into the U.S. from Canada. So basically, even though we were kind of gearing up for something exciting, it was this tariff update that just completely sidelined the entire thing, which probably does explain why. It's those globalists. The fucking globalists. Why would they ever go bearish when you increase tariffs from 25 to 50%? It's the fucking globalists. Why would they do that? It's not like people just generically understand that things become more expensive and thus it's bad for the economy in the short term when prices go up. It's not that at all. It's not people just reacting to, once again, a downward pressure of tariff news. It's not that. It's the fucking globalists. It's the globalists. Everyone else was buying the tariff news. They're like, we love tariffs. Let's send the market higher. But it was these globalists keeping it down. Jesus. I promise you this. When you start getting outside the world of your unreasonable, political ties and biases, you're going to be a more profitable trader. Biases, all of them, politics or not, it's very much going to get in the way of you making money. It really, really is. You got to step outside of it and not be that deep in. If you want to be drinking the Kool-Aid in your own life just to think that way, whatever, that's fine. We all have our own opinions. We all do what we want to do. And hey, that's some good talk with your family, friends, at the bar, whatever. But it does not have a place in the market. That's the one thing. I'm not telling any of you guys you're right or you're wrong. I am saying that it just does not have a place in the market. It will. If you were always trading on your political leanings, do you know how many gains you would have missed out on? Regardless of being the presidency as in red or blue, it's always paid to be invested in the overall market. Long-term investing, regardless of being blue or red, it just doesn't, you're missing out on good money. The people who hated Trump the first time around, they lost out on money. The people who they recently hated Biden, they lost out on money. One of the most extreme things I've seen recently is as political polarization is really, really amping up. I'm seeing a lot of people miss out on phenomenal opportunities. Believe in whatever vantage point of this world that you possibly want to, but time and time again, they've done a gazillion different studies on this stuff. Time and time again, you shouldn't let it get in the way of you making the proper decisions when it comes to the market. You shouldn't. I believe smarmy. I guess I don't know what that is. I'd have to look that one up. Yes, it does have a place in the market. The entire world economy has been changed to be run by Davos over the last few decades. That's 100% wrong. That's stupid. And you made that up with no backing. It's just I like how people say things so confidently with no backing, no evidence. It doesn't pass the litmus test of logic, and yet you'll believe that. It's fucking Davos has been running the global market for decades. Okay. Have fun with that. God, people. It's just so in the face of just actual facts and actual measurable impacts. If anything, Davos actually recently has the least power and the least influence it's had in actually a while. It's going down. It's going the other way. It's literally trending in the direction that people just don't care about it. Every single year, they're getting less ratings. There's less media organizations showing up. It's going down in its influence, and yet you're trying to pitch that they're controlling the entire global economy. No. If there was a control in that way, it would just be arbitrage away. It would, because remember, one of the most beautiful counteractions we have to what you're attempting to pitch is the fact that Wall Street are like, it's a bunch of greedy little fuckers who will do anything to make money. So if there is a clear mispricing, like to the point that it's illogical, Wall Street would arbitrage that away. So another way you could think about that in the real term is if you believe that the globalists are inappropriately pushing the market down right now, Wall Street would know that, and I'm pretty sure Wall Street knows more than me, knows more than you. They know more than all of us combined. So they'd be like, nope, this is unfairly low in price. They would buy it all the way back up because remember, more than their political leanings is just their bank account. Remember, we're talking about some of the most like scummy, greedy people in the entire world when we're talking about Wall Street. So if you thought that the globalists were pushing it down, they will be buying it back up. That's actually one of the nicest things of like the hardcore capitalism we see playing out in Wall Street is you get an absurdly efficient market. And I'm more of just the point of you guys like bitching and moaning about the globalists now. Where were you bitching and moaning when the market ripped in 2020? Where? The World Economic Forum basically has no impact on our stock market, and the Rothschilds, that's basically more in the central banking world, and more so also in Europe than even here. Obviously, the last I checked, Powell is not a Rothschild. Not all central banks are run by the same cartel. They're going to be different ones. Who cares who is currently pushing the market down? That's not the point being made. America has been getting F for decades, and now that something has been done about it, there is a problem. What are you missing? When did I say that we shouldn't be doing something about it? It's not okay. I'm trying to think of like a reasonable metaphor for you guys to understand. Okay, so let's think about this logically, and let's think about how like actually piss poor your argument is. Let's say you have a cancer right now. You're pitching that there's an overall bad situation. Okay, I agree with you. It is unfair that we are getting tariffs like to the degree that we are. So that's the cancer. To fix the cancer, you have to do something to get the cancer out, such as chemo. Chemo can make you absurdly sick, but you get absurdly sick in the effort to get rid of the larger disease. So there's a lot of parallels in this situation. If the overall cancer is the U.S. not being treated fairly in trade, Trump is now doing something that in the short term is causing a lot of pain, in this example, chemo, but you wouldn't sit there and be like, chemo is absolute fucking bullshit because it's going down. It's here to fix a problem, so it should help me from the get-go. That's what you're arguing. That's this whole like thing of like, it's unfair. Like, I agree with you. He is doing something to make trade more fair, but that doesn't mean that there's short-term pain. You're trying to argue in this metaphor, in this scenario, that because the chemo is there to assist an overall better situation, it shouldn't hurt you in the short term. No, it's going to. It's going to make you sick in the short term. And the idea is that, yeah, there might be a bit of pain right now, but it fixes things in the long term. In the long term. So chemo sounds globalist. I mean, the argument that the market shouldn't be going down right now is a stupid one. The market should be going down because it's as basic as this. As costs go up, that's going to hurt businesses. As businesses are hurt, that hurts the economy. As the economy is hurt, that hurts the stock market. It doesn't take giant leaps to understand. And I still fully agree. If this is all played out properly, in a handful of years, it'll be bigger and better than ever. We'll be more self-reliant. We'll have more manufacturing. We'll be in control of better trade agreements. I think there's too much of a conflation of what's going on in the short term and in the long term. And as a trader and an investor, really an investor, you should have that long-term approach. But in the short term, to just say like the globalists are pushing us down right now, that's fucking stupid. We're going down right now because that's how it like works. Matt, we agree with you just said you missed everything we were talking about. Well, I'm reading it. So unless you guys are having a secret chat without me, I don't think I missed anything. Well, how will this put the U.S. in a better situation? All the elites, all the allies are ditching the U.S. No, they're not. Do they need us so bad right now? We basically fund the world. Do you know how many militaries are paid for by us? Do you know how many social welfare things globally are paid for by us? They're not ditching us. They all need us. That's why they're not leaving. That's why they're all like begging Trump to have a deal and to come to some sort of agreement, because as much as it's painful for us, it's going to be on a relative basis painful for every other trading partner because we're the big kids on the block. So as much as it's painful for us, I mean, Trump by Q3 could pretty much send any other country in the world into a recession, like a legit recession by Q3. He could do it, and they all know it without a doubt. Like they all need us. How does this make us better in the long run? Well, first of all, we get fair trade deals. If you think that we were coming into this situation in a fair trade deal setup, no. What? The amount we were being tariffed was in no way proportional what we were tariffing anyone else. Like, we definitely got the short end of the stick. So not only were we getting bad trade deals, but on top of it, we were funding the world for everything else. So the fact that we're just being a little bit more reasonable with where our money goes in our trade deals when we're $35 trillion in debt, that's just smart. And then from there, when you're enticing people to come back and build manufacturing in the US, yeah, that's better for us. Not only are you going to be generating more business and more taxes, but it gives more jobs to people in the US. Unemployment, it's relatively low, but there's still people who need jobs. They need higher quality jobs and skills. So I'm 100% going to be U.S. first. I want more jobs here. I want more manufacturing here. I want more of our own taxes to go to useful causes within the U.S. This idea that we're footing the bill for other dipshits across the world when we still have our own vets, our own homeless, our own healthcare issues, it's insane. It's absolutely insane. So, like, how does this possibly make us better in the long run? What do you mean? It makes us more self-reliant, and it stops some of the fucking financial atrocities that have been going on for years and years and years. So, like, once again, I think in the long run, this does benefit us. I truly believe that. But also, I think in the short term, it's going to hurt us and also everyone else involved. I think the best metaphor is what I was saying about the chemo versus cancer thing. So to just be blaming this on like the globalists, you might want to blame it on the globalists for getting us into this situation. If your argument is, no, the globalists are who tricked previous U.S. politicians into bad trade deals and now Trump's undoing it, okay, I guess. But if you're just saying the globalists are making them look bad by shorting the market, no, just anyone who knows how to make good money is shorting the market right now. It's like, it's 1 + 1 = 2 type of a scenario. It's not some like big thought exercise. This is well said. That's exactly how I had to explain it to my fiance for her to understand. I haven't explained it to my wife because I don't think she cares. But that's just where I'm at in my life. All right. Is this the bottom? Is it? The SPY overshot the low from yesterday. Surprise. Now, is anyone surprised the levels that it hit? It bounced at yesterday's low. It came back, retested it, and it went down to 5550. I'm going to call bullshit. I'm going to say that Matt actually went into the future, figured out the levels of the bounce, and then came back into real time, the present, and put them on his chart. I don't know how, but I'm pretty sure Matt and Piper are Monday morning quarterbacking. I'm pretty goddamn sure that Matt and Piper are Monday morning quarterbacking right here, and I don't know how they do it. I think it's more luck than anything, but I'm pretty sure there are time machines involved. I'm pretty confident, 95% confidence that somehow Piper and Matt are pulling these levels off, these exact levels. Yeah, pretty sure. Something with time travel. There's no way. There's no way that bounce, break, hits the next target, bounce, guess where it gets rejected? At the exact next level. Like, it's time travel, dude. It's absolutely, utterly time travel. Matt's a globalist, dude. I wish one day I was invited. I bet they have the best parties, like where you get to sacrifice lambs and goats and stuff. Hang out with Satan. Dude, they might not be cool people, but I bet they throw awesome parties. I bet they really do. Nah, Piper has a direct line to the globalist cabal. Yeah, Piper's like, all right, let's rip it. It's also the removal of so much government spending that's been propping up the economy. Yeah, that's another thing. Literally, when you're just, that's not money flowing into the economy, for sure. There's other things like that add into it. But folks, I've made my point very, very clear. Here's my big prediction. I have a short-term and a medium-term prediction. Short-term, pain until the end of the month. I think end of March, start of April, we pump. By time we talk about like May, June, I don't really know, but I do believe sometime in the next 12 to 18 months, the market doesn't just take a hit. I think it takes a considerable hit. I am looking for a 30 to 40% pullback in the overall market from whatever the recent high is at that time. So like I said, about 12 to 18 months, somewhere maybe starting to see the cracks in Q4 of this year. Maybe it plays out Q1 to Q3-ish of next year. So in the short term, I see pain. I see strength and bullishness in April. By the time May, June, I don't really know. I have to see the option chain, but I do believe that we're seeing enough of the pain from such sustained inflation. We see the pain from really printing trillions and trillions of dollars and what that's going to do with respect to inflation. But we're seeing it. We're seeing bankruptcy spike. We're seeing delinquencies. We're seeing a spike in credit card debt. We're seeing a spike in missed credit card payments. We're seeing unhealthy signs. So the question is how long does this take to play out through the market? So in the very short term, like the next 2 weeks, I see bearishness. Then I see bullishness in April. And then on more of the medium time frame, somewhere for 12 to 18 months, I believe there's going to be a 30, 40% pullback in the overall market, more circle late this year, early 2026-ish. And then from there, I think we make a foundation and then rip once again. That's where my current base case on this whole situation is. We'll see if I'm right. We'll see if I'm wrong, but it's going to be a fun ride regardless. On a completely unrelated topic, I had waffles with strawberries for brekkie. Honestly, I would argue that is exactly on topic. Matt, your code Goonie doesn't work on Adam and Eve store. Oh, that's weird. You should get a nice discount on Adam and Eve. I mean, as one of their biggest customers, they should give me a discount, you know? I'm surprised Goonie isn't working there for you. Very, very surprised. Trade wars don't resolve quick. Depends on your definition of quick. I think this will be resolved within April. I mean, because if these don't get resolved, truly by Q3, Canada and Mexico will be in a recession, and maybe by Q4, China will be in a recession. Allegedly, they're in a deflationary situation right now, but their government's also setting up for stimulus, which is why I'm giving them a little bit more time to maybe figure things out. But this, I mean, if you're saying soon as in this week, okay, I agree with you that we're not going to get it resolved this week. But especially with the reciprocal tariffs being talked about in April 2nd, it feels like April is a prime time for them to get this resolved, because if not, by the time you get to Q3, Mexico and Canada are in legit recessions. That's weird. Your code works on Grindr. It should definitely work on Grindr. Tesla getting cracked again, taking out 220. Jesus. Well, we were looking good for a second there, and I really, really was excited about the negative gamma Vanderfield rally, but right at 10:01, 10:02, the update from Trump kind of ruined that entire trade setup. Which if I knew that, I would have never taken that second trade at 10:18 or wherever it was, 10:09. I would have never taken it. If anything, I probably would have been looking for something like this breakdown here, right around 10:21. But I just, for whatever, I was too, I guess I was paying too much attention to whatever this options flow was, which more puts just got purchased, by the way, on the Mag 7. And then looking at the SPY here. See, this is what I find interesting is even on this news, dude, this is the most call buying we've seen all day and the most put buying. Dude, neither side is relenting, which I think actually makes today's trading session uniquely difficult. But basically, at some point today, we're going to see one of these sides blink. Either the 0DTE calls are going to fall or the 0DTE puts are going to spike. I don't know which side's going to blink first, but when one side blinks, then we're either vomiting below 5,550 or we're going to be recovering to 5,600, 5,625. But the fact that we are at the most extreme call buying and the most extreme put buying of the day just tells you how fucking wild of a situation we're currently in. That is just absolutely nuts. The most 0DT calls right now and simultaneously the most 0DT puts, which, I mean, you like, they're literally just diverging from each other, which is making the net delta look like we're actually doing nothing, but there's a lot going on underneath. So I don't know. This trend line reversal might be the trade of the day. Maybe. Well, I would say the real trade of the day was around 1020, this breakdown, which I think we spoke about that. Yeah, I marked that out at 1022. I told you I'm not going to take it. Had I known the news, I probably would have, because just that tariff talk, we're obviously seeing people get freaked out. But we spoke about this back breakdown right here at 1022, 1023. I had it marked out. We hit the target. Even if you wanted it exactly, you'd have to wait a little bit more than we did. And then we actually puked to the second target. And right now we're just kind of in no man's land. So far for me, I haven't touched any of my options. I have no options right now. I was just kind of attempting to patiently wait. Obviously, I did trade on the futures. I'm up about $800 on 25 accounts, which I believe is in the realm of, what, 20K, something like that. So I'm happy with it. I think it could have been executed a little bit more, but I'm not going to hold myself really to that standard on a day like today where it was so choppy. It wasn't like I missed like a nice, beautiful trend that was evident. At least I don't believe I did. At least the way I look at things. I wouldn't mind. What is $500? $500 would be 25 points. A nice 25-point trade. We're getting a potential higher low reversal right here. Huh.
Order submitted.
63. Seeing if I could tag 400 exactly. Come on. We're doing a more of a smaller measured profit move. If I need to close it out early, I will. But this time I'm trying to keep the target really close so I can, my goal is to get my unrealized and my realized to be very close to each other. Come on, just tag it so I can be done. Done.
Order canceled.
Bada bing, bada boom, 1,500 per account. And most importantly, what I just pulled off is my realized high is now the same as my unrealized high. I'm just double checking to make sure. Yeah. So I made 30K here, 30K here. What is this? And then another 7.5. So I made about 37K right there. Kind of showed you the trade. Got that nice 400, got clocked there. I'm done. You could argue I already overtraded, but I just wanted to show you this. Obviously, all of it was executed in real time in front of all you cool cats and kittens, but about 37K locked in. And most importantly, I was able to get my realized and my unrealized to be the same. So it just gives me a little bit more breathing room because as your realized pulls back from your unrealized peak high, it basically just means you have less drawdown. So this is giving me a little bit more wiggle room. I believe the take profit now is already stopped at 50K. I'd have to double check the rules. So I don't think I have to worry about that differential anymore. I think I just have whatever that number is. So right now I have about 3.6K. But I believe with take profit on these accounts, I think I need to get to 5K. I believe I need to get another 1.5K because they all started at 150. So I think that's what I have to do. Did I just assume you're a cat? I did. I kind of assume everyone's a cat. A cool cat. But that's it. I'm done. Like I said, I tried to play that Blake right here. I've been watching this breakout, and then really what I played was I'll show you my exact reasoning. I find that this is the most didactic I can possibly be. But right here, we had lower highs, we had lower lows, and then all of a sudden, it looked like maybe, just maybe, I saw this. I was like, oh, maybe that's a higher low off of the lows of the day. So you had an interesting long opportunity here, or you could be a bit more conservative and wait for the breakout. So yes, you could have played this at 1051. Obviously, I played the other breakout, not just the bounce here. So I took on more risk, but I had a higher confidence in the trade. So right here at 1053, I liked the technical breakout, but that wasn't it. What I really saw going on was, what was it, 1053? At 1053 right here, I just saw the options market starting to really pop. Let me go back to the 30-second view, and more specifically, puts being closed out, calls continuing to be opened, and I just really started like right here. We popped to a new delta high, and it was right around here. And so not only did we have the price breakout, but we also had some aggression in the options market. And this time, instead of letting it ride more than I should have, I put it right at a key level, and I could have gone a little bit more, but right now it'd already be back to break even, and I'm like, shoot, and I'd have had to lose out on 30 points. So I'm happy with this on a choppy, shitty day. I did 3 trades. It was $300, maybe $400, and then the rest, another $700 trade, or I don't know, something in that realm. But right here, you can see about $38,000 locked in. So I'm happy. That's day 2. Day 2 of my recovery tour, looking pretty good. So those are the only trades I've done today. Right now, my options accounts are perfectly flat. I am interested in this, though, in my options accounts, especially for everyone in the Discord. If we recover above this, because we still might be having the makings of that Vanna rally today. If puts I just need more puts to be close. If these blue lines can go up and people keep buying these calls, man, oh man, we could have a beautiful Vanna rally all the way up to 5,630, 5,675, 5,700. Those are in the cards for today. But for that to happen, puts need to be closed, and they were getting closed for a second, and now we just went flat. So maybe it ends up becoming more of an afternoon thing. Tesla is showing a little bit of life. NVIDIA showing a little bit of life. I'm wondering if these dips right here at like 1042, 1039, 1048, I wonder if these are going to be the low of the day. Both the SPY and the Qs are trying to get this trend line breakout. We might have a higher low. Obviously, you could be much more confident about this play if the Qs go back green, taking out basically 573. On the SPY, you'd want to see it take out 558.50. You could have more confidence if we get above where all this happened, but we were kind of setting up nicely for a Vanna rally until the additional 25% on the steel and the aluminum tariff got announced, which that was right around 10:02. We puked, we tried to recover, and then things got pretty bad at 10:22-ish, which that was a beautiful trade. I just did a little bit of a recovery trade. You really don't have to go for much on these just because a small movement right now with heightened volatility. I mean, fuck, the VIX is up today at 29. That's crazy. It got up to 29.50. Yeah, with heightened volatility, we're getting bigger ranges. And I mean, you saw that. That was just like a quick little move that made a ton of money. And I'm actually very happy I wasn't overly greedy with it because that got smashed not much longer. Not much longer. Jesus. Very indecisive. So that's kind of it. Oh, obviously, use that code GOONIE, GOONIE. If you want to trade with Apex, you're allowed up to 20 accounts. The first $25,000 per account is yours. After that, it's a 90-10 split, 80% off on the 50K account. It means the test is only $33. That's a pretty good deal. From there, if you pass the test, you go from eval, then you have to upgrade to a performance account, aka PA. That's exactly why all of my accounts say PA, because they're performance, as in I'm attempting to trade to get real money if I trade well enough. And yeah, you can get a lot of money. I mean, year to date from Apex, they've paid me out $200,000, and obviously I lost all those accounts, but I'm trying to rebuild up these ones to see if I could get back on that payout, I guess, train. So we're gonna see how that goes. The next option levels, below 5,500, it's actually a pretty swift drop all the way down to 5,550. It's actually a pretty swift drop all the way down. Which, should I be playing that right now? Puts are being purchased again. They just like are aggressively getting these puts. Huh. Do I want to actually do something? Oh, golly. You know? Just golly. I have to think about it. Maybe I just take the rest of the day off. I see the VIX going up, though. Decisions. Well, I'm going to figure that out, but shout out to Apex. If you guys check it out, I highly recommend you do. Don't forget to use that code GOONIE, GOONIE, to get a discount. I'm going to go spend some time in the Discord, so if you want to join up with the Discord, surprise, surprise, use that code GOONIE, and the first month is free. Later on today, around 7:15, I'll be posting an update video of everything you need to know from the market today and how the options market is setting up for tomorrow. And then obviously we'll be streaming once again tomorrow, but tomorrow's going to be early because we're getting the inflation report. The Consumer Price Index report is coming out tomorrow, so be prepared for that one. The CPI report coming out tomorrow, 8:30 a.m., an hour before the market opens. I want everyone to be prepped up for that. So streaming early tomorrow, update video tonight, and in the meantime, I'll hang out with you guys in the Discord. Stick to your trade plan. Remember, today is not setting up in such a nice trend day that we've seen recently. Much more choppy. And I think if there is a play of the day, it might be the SPY recapturing 557 and the Qs recapturing, like, let's call it 472, 473, something like that. But keep double checking the options flow, because that real excitement to the upside would be really, you would see it with puts being closed out. So if puts aren't being closed out, the trade doesn't really exist until that happens. So that's what I have for you. I appreciate all the good vibes. And I guess here to the globalists, keeping this market alive and keeping us on our toes. That's what I have for you. Thank you so much. Love you all. Peace.